Here's a more developed analysis of the FT column by Katie Martin, enriched with both supporting points and counterarguments. Markets bending the knee to Trump. What's going on? Katie Martin warns that markets are increasingly shrugging off, or perhaps enabling, President Trump's erratic economic policymaking. Investors have grown complacent, seemingly betting on institutional and political norms to correct Trump's moves. This frog in the pot analogy captures a dangerous dynamic. As markets stay calm, the president may feel emboldened to push recklessly and with few checks. Examples of market calm despite turbulence: low volatility, bullish stock indices, and a gently sliding dollar. Despite Trump's aggressive tariffs, firing key officials, and weakening central bank independence, markets remain resilient. Transactional economic diplomacy. Major firms like Nvidia, AMD, and Apple have reportedly negotiated favorable treatment, e.g., revenue sharing agreements or eased tariffs, in exchange for compliance or investments. Weak institutional oversight. With the firing of the BLS chief, partisan appointments at the Fed, and a looser regulatory environment, the credibility of key economic institutions is at risk. The core warning: the danger lies in normalization. If investors continue to shrug off Trump's behavior, even when it undermines institutional norms, they're enabling further erosion of checks and balances. Markets must not mistake short term stability for structural resilience. Counterarguments and alternative perspectives. While Martin's outlook is concerning, several factors offer potential pushback. 1. Markets are rational, not reckless. Pre priced uncertainty. Some argue that much of Trump's unpredictability is already priced in. Volatility may be simply because markets have adjusted expectations and volatility premiums. Focus on fundamentals. Investors may be more captivated by strong corporate earnings and growth trajectories, sidestepping political drama. Institutional resilience may surprise. Public and market pushback. When companies face backlash, for example, boycotts for abandoning DEI programs, they may reverse course, suggesting markets and consumers still hold power. Judicial resistance is growing. Courts and legal institutions are fighting back through anticipatory noncompliance in litigation against overreach. Risks could reignite volatility. Debt fueled policies. Trump's Big Beautiful Budget Act could swell the national debt by $3 to $4 trillion over the next decade, potentially triggering long term bond market disruptions. Institutional trust erodes only so far. A politicized Fed or compromised economic data agencies may eventually shake investor confidence if they degrade too much. External pressures. The global reaction, e.g., allies pivoting away from the US due to instability, could shock markets, as seen in examples like Europe's weakened position. Oversight still matters. Regulatory frameworks remain. Despite attempts to weaken agencies like the SEC, existing laws and oversight structures could still step in, especially if public or congressional pressure mounts. Institutional reform isn't off the table. If independence gains support in Congress or through legal challenges, oversight mechanisms might restore themselves over time. Viewpoint. Martin's alert. Markets are too complacent. This enables erosion of norms and reckless policy. Market rationality. Investors factor in volatility and focus on fundamentals, not political theatrics. Institutional pushback. Courts, consumers, and companies may resist overreach. Political shocks could unduly spook markets. Regulatory fallback. Oversight mechanisms and institutions, while under strain, may retaliate or reform. Final thought. Katie Martin's warning is a timely reminder. Market stability amidst political chaos doesn't guarantee resilience and could be masking deeper vulnerabilities. However, there are countervailing forces at play. Markets, while not infallible, often internalize systemic risks. Institutions, despite being pressured, can adapt or fight back. And long term confidence hinges on continued credibility of policymaking and data integrity.